Our today's topic is Service Business Financial Statement. This tutorial will have two parts. In the first part, I'll show you how to prepare income statement, and in the second part, I'll show you how to prepare a capital account. So today we'll cover a question which is taken from Cambridge O-Level Accounting past paper. Here is the question on the screen. Anika owns property which she rents out to university students. She has made a consistent profit for each year she has been in business. Her trial balance at 31st August 2022 was as follows. So here we see the trial balance, and at the end of the question we have 5 additional information. These are the adjustment for the financial statement. Okay, so how to prepare income statement for the service business? Firstly, we need to write all the revenues or incomes of the business. Then we need to subtract all the expenses or expenditures, whatever you call, from the total incomes. Okay, then we will get profit or loss of the business. Okay, great. So here on the question we have capital, rent receivable, general expenses, bank, rates, insurance, repairs, drawings, non-current assets and depreciations. So these are all items not related to the income statements. Okay, only revenue expenditures and revenue receipts will be here in this income statement. Okay, so what is the revenue receipt here? We have here rent receivable, which is only source of income for Anika as it is a service business. Okay, so firstly let us write here rent receivable. Okay, so it is $162,000. Okay, why we wrote here? Because we have some adjustment related to this item here. Okay, then we have some expenses. We don't have any more incomes for this business. Okay, now we will subtract all the expenses from this income. Okay, so let us write here less expenses, or you can write here minus. Okay, so let us have a look at the question. What are our expenses here? So we have here general expenses. It will come. Bank, it will not come as it is an asset. Rates will be here, insurance will be here, repairs will be here. Okay, then we have depreciation. So these are only expenses for the business. Okay, so let us write here one by one. So here general expenses $26,500. so let us write here $26,500. okay, we have here rates $38,200. we have here insurance $12,400. we have here repairs $32,000, and we have here depreciation. Okay, we have here depreciation for premises and fittings. These two are non-current assets. Okay, so great. Now we have some adjustment. We will adjust these adjustments with these items here one by one. Okay, so what is our first adjustment? At 31st August 2022, rent received $8,100 has been paid in advance. Okay, so if money is received in advance, it will be subtracted. Okay, will be deducted from the income. So this amount is received, we will subtract from here. So let us write here 8,000 minus $8,100. Okay, good. So first adjustment is done. Second adjustment is here. At 31st August 2022, general expenses of $1,300 has been paid in advance and rates of $3,400 were owing. Okay, so here we have two adjustments. General expenses, $1,300 paid in advance. Okay, so we know advance payment will be subtracted. So let us subtract this amount from here, from the general expenses. Okay, good. Then we have here rates, which is owing. Okay, owing, unpaid, outstanding, due, area accrued. These all 6 words same. If you see one of the 6 words, you will add this amount with the respective item given on the trial balance. Okay, given on the question. Okay, so we have here rates $38,200. We have $3,400 which is owing. Okay, so we will add this amount with the rates. Okay, so let us add here $3,400. Great. Then we have here insurance, $12,400. Okay, let us see our next adjustment. Okay, number 3, the insurance includes $1,800 paid for 15 months period ending 30 November 2022. Okay, so rent is paid $1,800 for 15 months. Okay, until 30 November. If 15 months is not written in the question, still we will see how many months this insurance expense paid in advance. Okay, we are doing here for 31st August 2022. Okay, so here September, October, November, these 3 months insurance paid in advance. Okay, so we already know advance payment must be subtracted from the respective expense. Okay, so here $1,800 paid for 15 months. Okay, so this is for 15 months. We'll divide it by 15, and for how many months paid in advance? It is for 3 months. We will multiply by 3. Okay, so if we do calculation, we get here $360. Okay, so this is the amount which is paid in advance. We will subtract from the insurance. Okay, so let us write here minus $360. Okay, so what is our next adjustment? Okay, here number 4, expenditure of $9,000 for new fittings has been recorded in repairs. Okay, new fittings. Fitting is an asset. It is a non-current asset. Okay, asset should not be recorded as expense. So here repair is an expense, but this amount, this $30,000 includes $9,000 which is paid for buying fitting. Okay, $9,000. So this amount, this $9,000 should not be here. We will subtract this amount from this $32,000, and we will add this amount to the fitting, as it is a fitting cost. Okay, fitting cost will not be here in the income statement. Fitting will go to the statement of financial position, which is also called balance sheet. Okay, so let us write here minus $9,000. Okay, great. Then what is our last adjustment? We have here depreciation to be provided as follows. So here premises will be by equal installment on cost each year over a 50-year period. Okay, so what is our premises on the question? $418,000. Okay, so this $480,000 will be depreciated over the 50 years life period. Okay, or you can write here directly $418,000 divided by 50. Okay, so here it is 50 years. So this is equal installment method of depreciation. If you are confused about depreciation, I have so many videos on this topic. You can check out my channel. Okay, well, then what do you have next? We have here fittings 20% per annum by the reducing balance method. Okay, so 20% reducing balance method. This is another complicated method of depreciation. So when you see reducing balance method, first of all, you need to subtract the depreciation, provision for depreciation from the respective asset. Okay, asset is here fitting. So we have provision for depreciation of fitting on the question. So let us have a look at there. So here written provision for depreciation of non-current assets. So here premises were $42,000. This is not related. We have here fittings $71,000. This is the amount of depreciation we have to subtract first of all to calculate the depreciation for fitting. Okay, so one more adjustment we have here, it is about repairs. Okay, we purchased here fitting for $9,000, but it was included with the repairs, so we subtracted. First calculation is done. Now we will add this amount with the fittings. Okay, so on the question we have fitting which is $90,000. So let us write here $90,000. We will add this amount $9,000 which is a new purchase of fitting. Okay, then what? Then we will subtract the depreciation, means provision for depreciation, which is $71,000. Okay, so minus $71,000. Then the amount, the balance we get here after the calculation will be multiplied by 20%, the rate of depreciation. Okay, so let us multiply here. Okay, so this is how you need to calculate depreciation for balance reducing method. Okay, great, we did all the adjustments here. Now we will calculate one by one. Okay, first of all we have here rent receivable $162,000 minus $8,100. So what we get here? $153,900. Okay, so we wrote this amount on the last column, the outer column, because this is an income for the business. Okay, we will subtract all the expenses from this amount. Okay, then we have here general expenses $26,500 minus $1,300 equal to $25,300. Okay, great. Then we have here $38,200 plus $3,400 equal to $41,600. Okay, then we have here the insurance. So $12,400 minus $360, which is paid in advance. So if we subtract, it is $12,040. Okay, great. Then we have here repairs $32,000 minus $9,000, which is paid for purchasing fitting, which is a non-current asset. So what we get here? It is here $23,000. Okay, now calculation of depreciation. Here premises $418,000 divided by 50 years. Okay, $8,360. Okay, now fittings reducing balance method. $90,000 is the cost price. We have here $9,000, which is a new purchase we added. Then we subtracted the provision for depreciation, which is given on the question, $71,000. Then we will multiply 20% the rate of depreciation. Okay, after doing all this calculation, we get here $5,600. Okay, great. So these all are our expenses. We calculated, we recorded. Now we will add this all expenses. We will take this column to subtract from this total income. Okay, which is only one item, $53,900. Okay, so now if we add up this all expenses here, what we get? We get here $115,800. Okay, this is total expenses for the business, for this service business. So now what to do? Now we will subtract this expense. So from this total, so let us put bracket here as well subtract. So if we subtract, we get here $38,100. Okay, so as income is more than expense, so it is our profit. Okay, So let us write here profit for the year. Okay, so this is how you need to prepare income statement for the service business. So we have here 5 complicated adjustments. If you learn these adjustments perfectly properly, so you will be able to prepare many income statements. Okay, because these are the adjustments will be repeating again and again in various questions.